You just received a $3,200 state refund check in the mail, deposited it, and felt like you caught a break. However, that single check likely created a federal tax problem that is going to cost you significantly more than the $3,200 you just put in the bank. Most taxpayers have no idea this trap exists until they receive a notice from the IRS. But the reality is that your state and the federal government are like gossipy neighbors who share everything. The IRS officially confirms that they and state or local agencies share data through ongoing initiatives, including audit results, federal individual and business return information, and even employment tax data. When your state sends you that refund, they are also filing a 1099-G form and sending a copy directly to the IRS. This information is fed into the Automated Underreporter (AUR) program, a massive computer system designed to match third-party data against your tax return.
This isn't a small operation. In 2024 alone, the AUR program closed 1.2 million cases and generated $7.7 billion in additional tax assessments. The system is relentless because the rule it enforces is brutally simple. If you itemized deductions on your federal return and deducted state income taxes, then any refund of those taxes becomes taxable income the following year. If you itemized in 2023 and deducted $8,000 in state taxes, but then received a $3,200 refund in 2024, that $3,200 is officially taxable income on your 2024 federal return. Many people fail to report this because they mistakenly think of it as just a refund rather than income, but the IRS computers do not care about your reasoning. The AUR system will compare the 1099-G to your return, and when it doesn't find that income reported, the computer automatically flags you. This isn't a human making a judgment call. It is an automated process that generates a CP2000 notice.
The math behind these notices is simple and brutal. If you are in the 22% tax bracket, that $3,200 in unreported income immediately creates $704 in additional federal tax. Then the penalties begin to stack up. A failure to pay penalty of 0.5% per month, interest that compounds daily from the return due date, and a 20% accuracy-related penalty of $141. Very quickly, your refund has cost you over $900 in federal taxes and penalties, a number that continues to grow every month you ignore it. The IRS is currently prioritizing these cases because state refund mismatches are considered low-hanging fruit. The documentation is clear, the law is straightforward, and the computer can process thousands of these cases automatically. Furthermore, a simple refund audit can trigger a dangerous domino effect. Once the IRS opens your file for a refund issue, they often expand the scope to a full examination of your entire return.
Because state and federal agencies share results, a federal audit can lead your state agency to take a second look at your state return as well. This issue hits residents in high-tax states like California, New York, and New Jersey the hardest. In these areas, higher state tax deductions lead to larger potential refunds and bigger federal tax liabilities. For example, a $5,000 state refund in California could generate over $1,800 in federal taxes and penalties for someone in the 32% bracket. To make matters worse, many professional tax preparers, including CPAs and major chains, frequently miss these 1099-G reporting requirements. Even if your preparer screws up, you are still the one liable for the taxes and penalties. To protect yourself, you should follow a clear 4-step checklist. First, find your 2023 federal return and check Schedule A to see if you itemize deductions. Second, look at line 5A on Schedule A for state and local tax deductions. Third, if you deducted those taxes and later received a refund, understand that it is likely taxable income for your 2024 return. Finally, if you have already filed without reporting it, file an amended return immediately to stop the interest from piling up. The IRS information matching program never stops, and they can go back for years. The computers are watching, and they never forget.